Nippon India Nifty Realty Index Fund. Will investing in this NFO help you in your wealth creation process? Let us find out through an in-depth analysis in this video. Hi, welcome to holisticinvestment.in. We help individual investors like you to make the right financial and investment decision to reach your financial goals in a more faster and smarter way. But before analyzing this fund, let us first understand a few basic details about it. So as an NFO, it opens on 14 November 2024 and closes on 28 November 2024. And some of the key features of this fund is that it is an open-ended fund type which belongs to the category of equity thematic fund, and it has Nifty Realty TRI as its benchmark index, and there is no exit load as well as entry load in this fund. And the minimum investment you need to start investing in this fund is just 1000 rupees. And the fund manager of this fund is Mr. Himanshu Manje, and according to the riskometer, the risk involved in this fund is very high. Now, if you take a look at the primary investment objective of this fund, which is to provide returns to the investors that before expenses closely correspond to the total returns of the securities as represented by the underlying index, which can be subjected to tracking error as this is an index fund. Now, speaking about the index, let's also understand a few basic things about the index this fund is representing. So, Nifty Realty Index is designed to reflect the behavior and performance of real estate companies. So, the index comprises of 10 companies listed on the National Stock Exchange of India, NSE. So, this index is computed using the free float market capitalization method, wherein the level of the index reflects the total free float market value of all the stocks in the index relative to particular base market capitalization value. So, this index can be used for a variety of purposes such as benchmarking fund portfolios, launching of index funds, ETFs, and other structured products. Now, let's take a look at the top 10 holdings under this index. So, they are DLF Limited, Macrotech Developers Limited, Godrej Properties Limited, Phoenix Mills Limited, Prestige Estates Projects Limited, Oberoi Realty Limited, Brigade Enterprises Limited, Soba Limited, Raymond Limited, Mahindra Lifespace Developers Limited. So, from the weightage, we can see that the top first position is given to the DLF Limited by a weightage of 22.90%, while the top 10th position is given to the Mahindra Lifespace Developers Limited by a weightage of 1.62%. And now, if you take a look at the index returns as on October 31st, 2024, from the data and statistics, we can see that in 1 year, this index has produced a return of 66.22%, while in 5 years, it has produced a return of 30.47%, and since inception, it has given a return of 0.56%. So now, as you can see from the graph also, that inception that it had a high peak in the initial stages, but then it had a short dip, but consistently it has performed well in the long term compared to the short term period. So now, as we have a basic understanding about this fund as well as the index it is representing, let's move on to analyzing the pros and cons of investing in this fund to better understand that if investing in this fund will be worth it or not in the long run. So let's start with the advantages first. There are 4 main key advantages. Number 1 is a direct exposure to the realty sector. So this fund provides investors with direct exposure to the real estate sector, focusing on companies in the Nifty Realty Index. So this is great for those looking to leverage the growth in property development, infrastructure, and real estate services. Number 2, potential for high returns in a growth phase. So the real estate sector tends to perform well during economic expansion, and when demand for housing and commercial spaces rises, this fund could offer significant returns if the sector enters a strong growth phase. Number 3 is a diversified real estate portfolio. With investments in various real estate companies, the fund provides the level of diversification within the sector, helping mitigate risk compared to investing in a single real estate stock. Number 4 is the opportunity to capitalize on urban development. So, India's ongoing urbanization and infrastructure projects present a unique opportunity. The fund could benefit from the long-term development and modernization of cities. So, these are some of the advantages of investing in this fund. So, now let's take a look at the disadvantages. There are also 4 main potential drawbacks to investing in this fund. So number one is the high volatility and cyclicality. Like real estate stocks are known for their high volatility and cyclical nature. So during economic downturn or periods of high interest rate, the fund could see significant fluctuations in value. Number two is the sector specific risk. Being a sector focused fund, it comes with concentration risk. If the real estate sector faces headwinds like policy changes or funding issues, the fund's performance may be heavily impacted. Number three is the interest rate sensitivity. The real estate sector is sensitive to changes in interest rates. So as higher rates can reduce demand for property and real estate financing, any hike in rate could negatively affect this fund's return. Number four is the limited diversification across sector. This fund is not diversified across multiple sector, meaning it lacks the safety net that broader funds could offer. So this makes it more suitable for those willing to take on higher risk for potentially higher returns. So these are also some of the potential risks you might be undertaking while choosing to invest in this fund. So definitely go through these factors carefully and then only decide whether investing in this will be suitable to you or not. So what is the final takeaway from our analysis? Should we invest in the Nippon India Nifty Realty Index Fund? Is it really worth investing? So from our analysis, what we can understand is that this fund can be an intriguing choice if you believe in the potential of India's real estate sector and are comfortable with its risk and volatility. However, with its sector-specific focus, it's best suited for those with a higher risk appetite and a long-term investment horizon. So it completely depends on what kind of risk tolerance you have and what kind of time horizon you have for your investment. So basically it depends on what kind of investor you are. But our personal opinion from this analysis is that if you are an investor who's ultra conservative, that you're not at all willing to invest in actively managed fund, then this index fund might be a little bit suitable for you. But even then, our personal suggestion is that there are already similar index funds like this out there in the market that has a lower expense ratio and a lower tracking error compared to this fund. So if you do want to invest, it's better to invest in a fund which has low expense ratio as well as low tracking error. And also if you have higher risk appetite and you want your investments to have the potential to give higher returns which can beat the market itself, then you can definitely go for actively managed fund because it has the potential to deliver higher returns than an index fund. Because as an investor, if you're expecting dynamic fund management and investments that can beat the market, definitely actively managed fund can give you that. But an index fund, as I've already mentioned, can only replicate the index, good or bad. So you cannot expect dynamic fund management and you cannot seem to capitalize on opportunities or even take course corrective measures if the market crashes, which you can do on an actively managed fund. And also it will only try to replicate the returns the index is bringing, so it will not try to beat the index itself. So that's also something you need to consider. So finally, if you feel like you do not know what kind of fund to invest in because you do not have sufficient knowledge about the market, or you do not have the time to research about it because your life is already hectic as it is and you need a professional guidance, then you can definitely consult with a professional certified financial planner who will be able to look at the suitability of the fund's investment objective, risk profile, overlap ratio, and allocation to see whether it aligns with your risk tolerance, your investment objective, and what is the overlap ratio between your investment portfolio and what kind of allocation you need to give to this fund. So all these factors, they look at from all angles to give you a better customized investment strategy with a personalized financial plan to help you achieve your financial goals in a more faster and smarter way, making your investment journey more hassle-free and simplified for you. And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to our YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.